Good evening, Dan Fitzpatrick here, stockmarketmentor.com, and I want to talk about the cruise lines today. Members, I've got a pretty big strategy session for you. Our growth stocks are working pretty well, but I'm really talking about stuff like Tesla, DraftKings, and a few others, some of the Z stocks. So definitely check that out, okay? So anyway, but in this free chart video, I'm switching gears here a little bit with respect to DraftKings, which everybody seems to be asking about all the time, which is a fine thing. Just stay long as it's walking along the upper band. Know that you're not going to get out right at the top. You may get out right when you think the top is, but the stock kind of thinks differently. So just know at any given time that if the stock reverses, you're going to wish you had sold higher, but there's a pretty good chance that if you sell right now, you're probably going to wish you'd held out for higher prices. So just manage your risk with stops, okay? So we're looking at a different kind of trade now, and I'm not going to give you the entries and this and that and the other thing, but I'm just going to give you the analysis here. The cruise lines. Look, nobody going to loot a cruise ship, so there's not this kind of danger there. And so as this is all, I look at these as kind of like COVID stocks. As the economy starts to reopen, if these cruise companies were in severe, I mean, they kind of are still in severe financial crisis, but if they weren't able to get their ship in order, pardon the pun, or get their ship together, I guess we could say, then the stocks would reflect that. But as they're trading now, they're actually looking for, well, I'll say it, I'm sorry, smooth sailing, calm waters ahead, that kind of thing. And so I want to look at these stocks. Now, this is a breakout here on Royal Caribbean about average volume. I think you're buying the stock and you give it about 10% room to the upside. Carnival Cruise is still kind of in a little bit of consolidation. It got ahead of itself last week with this kind of gap and crap. These stocks, you know, they're so low dollar that they make these little tiny moves, but they're actually a pretty big percentage move. Like this one is over 15% from top to bottom. So this is consolidating. It's kind of gathering itself, and you got to give this room to below 15 bucks. Sorry, that's just the way it is. And then finally, Norwegian is kind of halfway between Carnival and Royal Caribbean, where it's up a little bit farther in the pattern than Carnival, whereas Royal Caribbean's actually kind of up at a new high. So any of these stocks, you know, if you buy all of them, you're not being diversified. Pick one. I'm not going to tell you which one. But any of these stocks are really going to work. Look at all of them, but have one stock that you're following. So no issue with earnings, because I think money's going to continue to come into these stocks. If this thing, for example, breaks out above 18, it's probably a pretty good chance that it's going to at least 20, and that's over 10%. So you're going to get some big percentage swings in these stocks, and I think money's coming into them, which means maybe you want to get in there before all the money has come into them. Get in there a little bit early, and then you can afford to get out late.